Good morning, guys. Flattish open despite the fact that August retail sales and Philly Fed, notably Philly Fed, much better than anticipated. Let's take a look at the sectors. Remember, it's not that bad so far in September. We're down about 1%. Banks up today as yields are up a little bit, but banks have been really sideways since February. Not a big momentum player at all. Retail's up on the better numbers. We see apparel doing a little bit better, auto doing better as well. Industrial's kind of disappointing, a little flattish here. So big names, your Honeywells, 3M, not really doing much at all today. Tech is down because there's some weakness in semiconductors, and China is just a mess. I mean, forget about the casinos. They've got some other big problems I'll get to in a minute here. The thing that I'm most concerned about is we've been seeing a very slow deterioration in the advanced decline line, and that is very closely watched by technicians as a sign of when you have either near-term or long-term market tops. About 15% of the S&P 500 is 20% below their 52-week highs. That's kind of a significant number, but more so if you get deeper down into the lower market caps. About 30% of the S&P mid cap and almost half of the S&P small caps are 20% or more off of their 52-week highs. And this is largely, as you would expect, sectors that are exposed to the reopening story, where in some cases they're reconsidering the extent of the reopening around the COVID variant. So if you take a look at some of the big industrials, obviously travel stocks like airline stocks have been weak, but FedEx is 20% off its high. Some of the big material names like DuPont, also PPG is 20%, Caterpillar, Stanley Black & Decker, Lockheed Martin, 3M about 12% off the highs. But you get the point here. With the S&P only 1% off of its high, these are fairly significant. Same with the retailers. They topped out many, many months ago in the earlier part of the year, and some of these like Nordstrom are significantly off their high. Abercrombie more than 20% off the highs. Kohl's, Ross Store, discounters always do a little bit better, but still this is not a great performance considering how well they were looking in February and March of this year. The China slowdown, particularly the decline in retail sales around the COVID concerns, it's really affecting the luxury retailers. A lot of these are based in Europe. Kering, Tapestry, Richemont, Movado, LVMH. LVMH is a monster over there. That's a $375 billion market cap. It's one of the biggest companies in Europe. It would be a top 15 if it was in the S&P 500. So that is weighing on many of the European indices. Home builders also a week. We see supply chain and labor problems affecting the ability of some of the home builders to fully deliver on their orders. So Pulte had that issue. We see them all off about 11, 12, 14%. There's been concerns about drug control prices from the Biden administration. This is a completely separate issue to COVID, of course, but that's been weighing on big pharma, and these have big market caps. So that's another sector of the market that's been weak recently. So there are pockets of problems here, even though technology and communication services continue to hold up. Finally, around China, I know we're a bit concerned about the casino stocks. I just want to point out what's going on with Evergrande. This is one of the probably two largest property developers in China. Huge, huge company. And we're talking about $300 billion in debt out there. And there's a lot of concerns here, and that's weighing on the China market there. This is an issue for the high-yield market globally. A lot of people have gone around the world trying to get high yields, even higher yields than they're getting in high-yield market in the United States, which is below 3% right now. So you want to keep an eye on this. It's not easy to get exposure to China high yield. There's not many that do. HYEM, some of the emerging market high-yield funds are out there. So I don't think there's a big contagion around this, but just be aware, Carl, that a lot of people in the United States have been going overseas trying to find high yield, and, you know, this could be a potential issue. Back to you.